So can you all see my screen now?
Yeah, we can see.
Yes, okay. So we'll start from here. So it's personal finance and investment. So the biggest problem is that what we often don't realize is that most of us have our money in only in saving account. So because we are often told that if we like put money in our bank, then our money is in safe hand, and also we get interest. So that's why a lot of people we just keep the money in bank. But often we don't realize one very important thing, that is, if you check here, i'm just giving the example of I'm just giving the example of SBI because SBI is the biggest bank in India. So if you see, currently the rate of interest in SBI is okay. So we have few more members. So everyone, welcome. We just started, so you have not missed anything. Uh, so just I'll continue. So if you see, when we put our money in bank saving account, you can mute yourself so that no others don't get disturbed. Okay. So if you see, in saving account we get like 2.7 to 2.4% rate of interest in most of the saving accounts, be it any bank. So the problem is that we think, okay, I'll put my money and I'll get 2.7 return, and we are very happy about it. If you see, this is the last update on 15 January 2021. Now, the problem that comes here is that if you check, the inflation rate in India is currently 7.6%. It is of 2018, but it's almost around 6 to 7%. Now, what is inflation rate? So, if I tell you a very basic concept, so inflation is kind of is that we often say that mangai, we say it like that. So, the value of money goes down. Like, for example, if 5 years back, if we used to get a chocolate for 10 rupees, now it costs us 20 rupees. So that is what is called as inflation. The value of money goes down, and currently in India the value of money goes down at on average of 6%. Now try to understand this. I'll explain you in very short term. You get how much? 2.7. Let me make it 2 just for the like sake of calculation. I'll make it 2, and inflation rate, let me make it 6. Now if you put rupees 100 in your bank, after 1 year you will get rupees 102, correct? So if you put rupees 100 in bank, after 1 year you will get 102 because 2% interest. Now the inflation rate is how much? It's 6%. That means your 6 rupees will come down. That means if I subtract 102 minus 6, how much we get? We get 102 minus 6 equal to rupees 96. So we invested 100 rupees, we kept in bank 100 rupees, but we end up having only 96 rupees. The value we have 102, but the value is 96. So till here, everyone got my point?
Yeah, it's clear.
Yes. So this is the reason why. Let me just open the chat. Someone is sending message. Okay. Okay. So this is the reason why when you keep money in our bank account only in savings account, we often lose money in the long run. If you see, we just lost 4 rupees. We think that our money is growing, but in reality our money is going down. So what to do? So we need to find such investment platforms or option where our interest rate is more than the inflation rate. Often we don't realize this thing. We think that okay, we are earning good money, but only if you just work and you earn money. If you don't put in like good saving options, you will end up losing money, as you have seen here. So our goal should be always to invest in such places where we get around more than 6% basically, because inflation in India is around 5 to 6% every year. So if you get more than 6%, that means our money is growing. This is the very basic concept. Now there are a lot of investment, fewer risky, fewer risk free. So we need to know where to invest, like what are the options that we have in India. Currently we have a lot of options. Like I'm not an expert, so I don't know about all the options, so I'm just sharing about the things that I know and things where I have got into. So if you see briefly, these are some risk free investment options. First one is like bank fixed deposit, right? So in bank's fixed deposit, we get around 6 to 7% rate of interest. So often the biggest mistake that we do is we put the money in our bank account, but we don't fix it. So if you just simply put your money in bank account, you will get 2.7% as it is shown here. But if you put it in fixed deposit, you will get 6 to 7%. So you are beating inflation. Our main aim is to beat inflation. So if you put here, for guarantee you will get 6 to 7%. That's why it is a risk free. You can say it's a kind of risk free investment. Then we have other options, like for example, the most popular one is public provident fund. But here the problem is that the money get locked in for, I guess, around 15 years. Then we have something called as recurring deposit, and there are other options as well, like post office and all those things. Those will not cover. So these are some of the risk free investment which you should try, because here you will not lose money, right? There is no chance of losing money. Now if I move to the next one, what are other investment options that we have where there is risk? And you should always know this thing. You see, more risk equal to more rewards. So this is the like the golden rule. So you should know where to risk high, where to risk low. It will depend on like how much money you have, how much you want to risk, like how much money you need in your coming days, and all those things that I'll not say. So these are some of the other options that you have. First one is mutual fund. So basically what you do in mutual fund is that I'll explain very shortly. First you need to know what is stock market. So basically in stock market, when you invest in one company, or you can put money in different companies. But here comes a problem. So I'll tell you what is the problem. Like let's say for example, you are someone who is very beginner. You don't know which company will grow, which company will not grow. So there the problems come in. Like because I'll just show you here. Just give me a minute. If I search, okay, so let's say if you don't know which company will grow, which company not grow, because beginners often they don't know which company will grow. Let's say you have invested in a company called as Jet Airways. We all know that this company, like, it's gone, right? So if you would have invested a lot of money here, by 2020 your all your money would have been like totally zero, almost zero, because if you see, at one time the price was almost, one share was almost 800 rupees, but now the price is almost 30 rupees. So almost all money gone. So that's why people say the stock market is risky, because you need to do a lot of research and you need to be expert in choosing different stocks. Similarly, we have one more example. If I come here, Yes Bank share, if you see, recently we had news about Yes Bank. If you see last 1 year, you see it was on 60, and now again it came down to 12. Now slowly it is again going up. So this is the reason why investing in stock market directly is very risky. So what to do, right? As a beginner, what to do? So in mutual fund, what they do is, there are experts who will divide your money in different companies. So that's why you can select a good mutual fund. You give the money, and they will invest on your behalf. They will take some portion. It's very less. Like these days, in online platform, you get like they will charge less than 1%, and they will do all the thing. So the benefit is that I'll show a live example here. If they invest in 100 companies, even if one company goes down, your money is still safe. That's why like mutual fund is a very like good option for beginners, which we should do. And next we have gold. Everyone know about gold. The price, you can like invest in gold. The price goes up, you can sell it in that way. Then we have crypto. So we'll do a separate session on crypto, because it's a very complex topic. So we'll not cover this. We'll mainly cover about mutual fund today. So now the things that whenever you invest in any of this or any of this, you get something called as compound interest. Now don't get scared by looking at this formula. So I'll just tell you quickly. In compound interest, this t value is time, and if you see, time is exponent, right? So it will grow exponentially. Now what does this mean? I'll give you an example, and you'll get shocked, and you will know like why you should start early. So the question is why you should start investing early, right? I'll give you very one example. You should like listen to this example very carefully, then you will understand the whole game, basically why you should like start investing early. So here's the example. Okay, So this is you and this is your friend. This one is you and this is your friend. Now let's say today after watching this session you planned that you will start investing per month, 5,000 rupees per month. Okay, and you will invest for 20 years, because these all mutual fund all those things are like long term game. Okay, so you started in the year of 2021 for 20 years. How much money per month? 5,000 rupees. Very important. Just watch this, 5,000 rupees. Now, after 20 years, your total investment is 12 lakh rupees. That means you will exit in the year of 2041. Now, after 10 years, one of your friend, he realized that okay, this you are investing, so I'll also start investing. So in the year of 2031, this guy, he thought that okay, let me also start investing. So now he thought that okay, since I'll invest only 10 years, not 20 years, so what I'll do is I'll put double the money. He'll say, okay, you have invested 5,000 rupees, I'll put 10,000 each month. So the total investment is same, 12 lakhs here, 12 lakhs here. He will also exit in 2041 and you will also exit in 2041. Now let me show you the difference. Just watch this. So we'll put in your case 5,000 per month. I am putting a average rate of interest 12% and time period was 20 years. So at the end of 20 years, you will get an estimate of around 49 lakh rupees by investing 5,000 rupees. Now let's see your friend who started like 10 years later, but he invested double the money. Let's see. So you will get almost 49 lakh rupees here. Let me write it down here. Your friend invested how much? 10,000 rupees, double the amount, because he thought that he started late, he will invest double, but for 10 years. Now see the magic. He will get 23 lakh rupees only. Now just try to understand this thing. Even if your friend invested double the money, but he will end up getting almost half, less than half. This is the magic of starting early. So when you start early, even if you put less amount of money, you will end up getting more in return. Like if you see this guy, he invested only 5,000 rupees, but for 20 years, he got more. Whereas he invested 10,000, but for 10 years, but he got less. So if you start early, you can put like small amount of money, your extra pocket money, extra saving, or if you do some job, then extra money you can put. And in that way, at the end of like some years, you'll get more in comparison to someone else who have started recently. So this is the power of compounding, because if you see the formula, time is like it comes in the power. Okay, yes, we'll read the comments later. Yeah, you'll get a recording. So if you see here, the t is the exponent. So that's why even if someone start later, like after, let's say someone start in the year of 2035, even if he put 20,000 rupees per month, still he will end up making less. So this is the power. So that's why always start early. The more early you start, the more better it is. And these days it is very easy to start. So which we'll cover now. So now question is how to start, right? Because now we know the importance of investing and the risk and everything. Now the question is how to get started. Okay, so I'll just show you a few example here. So best online platform for mutual funds are, these are the three which I use and I found it very good: Grow, Paytm Money, and Zerodha. So here the good thing is that if you go to bank and do, that charges are very high and also options are very limited. But in this online platform you can like do everything by your own, and the charges are very less, and everything is transparent. Now someone, like a lot of people ask me a question that okay, what if I start putting money and tomorrow if Paytm Money goes down, or what if tomorrow Grow they stop business, right? What will happen to my money? So the thing is that your money will be safe, because these are just middlemen. They will take your money from you and they'll invest in like for example ICICI Bank, they'll give to them, or they'll give Axis Bank, or whoever is running your mutual fund. So that's why you can always redeem the money from them, even if in worst case they shut down their company. Now let me just show you one example how to get started, and what are some of the like benefits or some of the things that you should know before starting. So I'll show you in Paytm Money, because I am currently doing it Paytm Money and I am really liking the like service. You can try it Grow and Zero Die as well. So if I go here, I'll show you. You can someone you can mute your mic. Okay, let me just mute the mic. Okay, so if you see here, wait, where is the platform? Okay, it's asking to log in. Just give me a minute. I'll just show you. Okay, yeah. Just see this one. Okay. So if I go here, if I search for equity, okay, equity funds. So basically equity, I'll not go on what type. There are a lot of funds are there which you need to study on your own. So I'll just show you some examples here. Like if you see, for example, I'm investing in this one, this ICICI by Prudent Technology Direct Growth. Now why mutual fund is safer than stock market is because if you see here, if I scroll down, see this one, this is a technology based fund, and they invest the money in all this company. You see, all this company, they'll like, if you put 100 rupees, they'll divide your 100 rupees in all this company, 20% in Infosys, 8% in HCL, and all those things. So in worst case, even if tomorrow Bharti Airtel goes down, let's say, still your money is safe because it is divided in all this company, right? And if you check last 1 year return, you see it's 64%. Last year it gave higher because of coronavirus, but always it gives not give 64%. You see last 5 years it is giving around 20% return, which is higher than the inflation rate. So as I told you in the beginning, our main aim is to get return more than inflation rate. So if I check my slide here, you see here we got 2%, inflation rate of 7%, but here we are getting 20%, right? So this is the reason why we should like invest at least some portion of money. But it's not that every time it will go high. These are all long term thing. It's not like today you will put money, tomorrow you'll take out. You should plan minimum of 5 years, only then you will make profit. And the profit, as you have seen here in this example, that when you invest in long term, your money grows at a very high scale. So it's not if you invest only for 1 2 years, and even if you put lakhs of money, it will not grow much. But if you put less amount of money for a longer period, it will grow a lot. So if you check this one now, if I go back, I'll show you one more example here. Like recently during coronavirus time, we all know that all this pharma company, they are making vaccine, they are making medicines, right? So that's why these companies are growing. If you see last 1 year, they made almost 57% return, right? And if you see last 6 months, it's 15%, and last 5 years it's 12%. Still, it's higher than the inflation rate, right? Now, when you start to invest, like there are two things that you need to know in mutual fund. Okay, one is called as lump sum and one is called as SIP. So in lump sum, the problem is that in lump sum you basically invest only one time. Let's say you have 50,000 rupees, you'll put the money one time. But in SIP, what you do is every month automatically they will cut from a bank if you connect your bank. Now, why SIP is better, why lump sum is not better, that I'll tell you. Like for example, if I go to last 1 year, okay, no, let's go to last 3 years. Okay, yeah, last 3 year. So if you put your money only one time, let's say you invested during this time, December 2019. So when you invested your money one time, you see it went down, right? So you will face loss. But later on it went up. But if I ignore this part, you see it went down, right? But if you keep investing month wise, then sometime there will be high, sometime there will be low. In that way, your loss will get averaged out and you will make profit. That's why the best way is to always do SIP. Like for example, if you want to do SIP, you see this SIP is minimum 100 rupees. So what you can do is you can click on start SIP. So you can minimum 100. So you can, let's say, you can, if you can afford 1,000 rupees, you can put 1,000 and you can start an SIP. Then you can connect your bank. Every month they will cut 1,000 rupees. So as I have said here, if you invest 5,000 rupees, so let's say you can select five mutual fund. There are a lot of different mutual funds out there which you need to research on. I'll not advise you what to take, what not to take. So based on that, you can divide your money, and automatically every month this much money will go there. So in that way you can do. So I'll give one more example here. Uh, just a minute. Okay. So the benefit of doing online is that, like for example, if you go to bank, let's say your bank is ICICI Bank, so they'll suggest to invest here only, right? But there are other good options as well. So that's why doing online is the best. And also the minimum rate you can invest. So like if I go here, top rated funds. So in this platform, they'll suggest to where are what are the good like funds where you can invest. So like for example, if I go this one, currently this one is doing great. If you see minimum 500 rupees you need to invest, and it is getting almost 5-star rating by a lot of rating agencies. So if I click here, so in the last 1 year it made 19%, in last 3 year 15%. So so our inflation rate formula is correct, right? So we are making more than inflation. Now if I go down, you see almost 8,000 crore is their size of fund that they have. And where they invest mostly in financial company, chemical company, healthcare services, etc. Now the risk is very high here, so the return is high. So if you check where they invest, you see these are all the company, Voltas, then Bajaj, HDFC, etc. So in that way, so for a beginner this is very like good way, because if we directly go into share market, the problem is that we don't know which share will go up, which share will go down. So if you put all your money in one share, if that share goes down, then all your money is gone. But here it's very risk free, not very risk free, but risk is very low, I'd say, because they divide your money in lot of different places. And now if let's say if you invest here, which is Axis Bank Mid Cap. Now Paytm Money will take money from you and they'll give the money to Axis Bank, and you will get mail from Axis Bank as well. Now, if you if someday Paytm Money goes down, then you can always take out the money from Axis Bank. So it's very safe, and also like you can put your money anytime. Similarly, you can take out your money anytime whenever you want. That's the benefit of it, which you can like take. So if you have any doubt till here, you can ask me. uh, then we can come towards the end, because the aim was very. Now I guess you know why only putting money in saving account is not the good option. I'm not saying put all the money in other options. You should have some money in savings as well, because it's emergency fund, right? But apart from that, if you have extra money, you can always put it in these or this. So that's all from this session. I hope uh, you found it helpful. Let me open the chat once.